All right. Well, hey everyone. We're excited to bring you the third edition of the CRE News Hour. Again, my name is Rafael Collazo. I'm a broker out here in Louisville, Kentucky. And Henry, do you want to make a quick introduction?
Sure. Henry Eisenstein, EXP Realty National Broker.
Awesome, bro. Yeah. Well, we're really excited. Again, there's a lot of great interesting news stories that have come available recently. So I'm going to go ahead and get us live on that as well.
Beautiful. Yeah, we come to you live each and every single Wednesday at 2
Absolutely.
p.m. Eastern Standard Time. So if you guys enjoy this type of content, make sure you tune in. We go in live just about everywhere you can possibly Google us. We are live. So we're coming to you live with some real estate news.
Absolutely.
Just about everything nationally, eventually globally, we'll start touching on, but we'll start covering the basis a little bit. So, Rafael, what do we got? What do we got first?
So yeah, this is one of the articles that I came across. So I'm actually actively working on a development project that incorporates similar to what they're describing here, food halls. So, when you imagine a food hall, typically you'll imagine it in like a school or, obviously they're very popular in a lot of college campuses, but it's been a trend that has been kind of expanding over time. There's an interesting chart you can see here, how the rise in food halls around the United States. And the unique thing about it from an investment perspective is quite fascinating in that, if you can deliver a, 300 square foot space, for example, that's all you really would need in order for a restaurant user to be able to have a kitchen and a freezer and whatever else they need. And, it offers a lot of flexibility to these types of startup restaurant users. But from a price per square foot perspective, you can charge quite a bit. And a lot of the issues that you see when people are looking to start a restaurant is the upfit costs to build out a kitchen, and obviously the long-term commitment from a commercial lease standpoint. And so this helps alleviate some of that responsibility from the tenant base. And obviously, again, it gives a lot of variety to different customers that are coming to a location. So, you can go to a food hall and try, some Asian food. Maybe there's some Indian food on site. Maybe there's, barbecue, depending on where you're at in the country. So, it's a really cool model. And it's just interesting to see how it's all, continue to evolve over time. So I don't know if you've seen it in your neck of the woods. I'm sure there are food halls that are present. So
yeah. And I mean, a lot of ghost kitchen options. I think this is actually a really lucrative option. What kind of asset class? I wanted to make sure we touch on this to see how people can actually implement this in their business. Like, what kind of asset class are you seeing this being most lucrative for?
Yeah, so it's definitely a mixed use project. So one of the projects we're looking at is going to be a redevelopment. So we're going to buy a property we're actively rezoning. Then we're going to go ground up and we're going to do a brewery on site, and then we'll have these mini bay restaurants on site as well to kind of facilitate those who are coming to the brewery. They have the option to be able to get a little bit of food or whatever else, and then in a lot of these brewery concepts, there's an event space component because they want to bring people on site so they can consume the beer. Obviously, those little bays also can then become the caterers for those types of events. So it creates a kind of a cool little ecosystem. And obviously, from an investment perspective, you get the income from the brewery tenant, and then you also get the income from the mini bay restaurants. So
I love that.
Yeah,
I think this is a really interesting concept, especially in the right markets, right? The right local markets where you're going to have the demand. I think that actually, like you were even bringing up, doing things like collaborating with a brewery would be really smart. But this is an awesome opportunity for those of which are finding, I guess I would say, industrial properties or retail properties where you have that ability to bring in the restaurant space, right? The zoning is allowed. I think this will be really powerful over time. A really good rezoning option where you can basically make money out of someone else, basically out of what other people don't think is valuable.
Yeah, and repurposing spaces, right? You have an industrial building for whatever reason that's just not getting the right traction. Maybe there's not, whatever that is. Like if you have a building that you could then repurpose into something like this, it could really, potentially be very lucrative for you as well. So variety of different avenues you can explore, but it is definitely a trend that we're seeing in the marketplace. So next up is a big article, which I know we were talking offline about, and I'm sure many of the viewers have probably heard the verdict regarding the jury for the NAR and some other larger firms. I think Keller Williams and another larger firm were included in the lawsuit as well. But in the state of Missouri, they won a judgment against those entities regarding collusion, I guess, for commissions. I believe that was the premise of the lawsuit.
Yeah, it's a big conspiracy. We're trying to take advantage. So, yeah, I think this is a huge, this is a crazy step, right? I definitely think that there's going to be, like we were talking about, very large level of impact that this is going to have to the residential community of realtors, and real estate will be done slightly differently, right? Especially the way that expectations are set up in regards to commission amounts. I was trying to explain this to my fiance yesterday in regards to kind of like the specific changes. I believe I'm obviously I'm curious to get your 2 cents of like, what do you think is going to change because of this?
Yeah. So, I mean, obviously, the way that we've typically operated in this space is that, the seller would be responsible for paying the commission for both the buyer's agent and the seller's agent. The premise of this lawsuit is that that would be no longer something that would be required, essentially. And so, from a listing agent's perspective, you can still charge a fee for the fact of being able to list for a seller or an owner of a property. But from the buyer's agent standpoint, that kind of leaves you somewhat out to dry if your client is not willing to cover a fee. Those fees on that side are probably going to diminish pretty significantly. And then, cooperation between the seller and buyer has been severed, essentially. And obviously, there doesn't necessarily mean that there was a cooperation to begin with, but the premise is, since the seller is the one covering the commissions of the agents involved in the transaction, there's kind of a weird dynamic there as to who it really is, in fact, the one paying for the services. So
Sure. Yeah. I think that this is going to drive most agents, obviously, to be predominantly listing agents, and not a lot of people are going to want to work with a buyer, where the buyer, which I already saw happening, right? Like I already saw, over the last few years, I feel like it's very common for agents to go like, when you get an inquiry, right? When you get a lead who reaches out to you, like they're always like, "Are you the listing agent? Are you the listing agent of this property?" Because like I don't want to deal with a buyer's agent, right? Like they that's always been the premise, at least from what I've seen in the last few years. I definitely think that the quote buyer's agent specific, those agents who are only doing buyer side deals on the residential world, I think are going to really start struggling. They're going to see a massive difference of struggle, in my personal opinion. And the compensation just won't be there. I think this will probably compress commission amounts. The only thing I wanted to stress, though, about this was two things. One, I do believe that this was a major money grab. I don't believe there was this crazy, like actual inflicted pain, quote unquote, that people are feeling because of this commission, confusion, essentially. I think this was a major money grab. I think it was honestly just kind of like a BS lawsuit where, it's been done for 100 years the same way. I'm not saying it doesn't need to change, but I don't think that all these commercial brokerages, and NAR included, needed to come out of pocket $2 billion to make that change. I think that there's a much different way to make that happen. And two, I think that the residential world in general, as someone who came from the residential world doing over 100 transactions a year for many years, I think that this is a eye-opening event that will change the way people think about getting into the real estate world for the years to come.
absolutely. No, I couldn't agree
Definitely
more.
take a look at.
And I think, and I wanted to point out kind of a reference within this article that references that changes resulting from the trials could include significant alterations to the home selling model. The overall pool of potential commissions could shrink by as much as 30%, is what they're projecting, and as well as many of 80% of the nation's approximately 1.6 million agents could leave the business. So that's what they're projecting. I'll even wager to say, I think there needs to be a little bit of a culling of a herd to begin with, because there are a lot of agents out there that are not really full on, they're not committed to the industry. They're not committed to, really servicing their clients to the best of their ability. And obviously that affects, the reputation and how we're viewed as professionals. And so,
Sure.
if you're part of that 20% that is optimal, you're working your tail off and you're doing what you need to do, obviously you'll get the listings that you deserve through the actions you take, and ultimately you'll be able to survive within the industry. But for those who are just kind of fly by night agents, I mean, I think this is probably going to be a pretty big deal.
Yeah, my biggest fear, realistically, and like the last thing we can talk about in regards to that is, while you're bringing up the next article,
Yeah.
is that my biggest fear is that they're going to do this type of money grab in every state across the country.
That's the precedent that's being set, and that's where
Exactly.
that's why they're trying to appeal it, is because like if they allow it to just not be appealed at all, then they run the risk of literally every lawyer out there that sees this as an opportunity for them to make 30% of whatever the winnings are, because that's what a lot of attorneys charge for their fees, which is absolutely ridiculous. But that's a different point.
Yeah, why isn't there a class action shoot about attorneys' fees? How about that?
These personal injury attorneys that are making 30% of the judgment or 40% of the judgment. I mean, I feel like that should probably be something we address. But I digress. I
agree.
All right. So next up is we have an article regarding real estate tech. So I'm, for those of you guys who don't know, I actually come from a technology background. I'm an engineer by trade and then got into the software development space. So I've always been really fascinated by technology. And now that I'm in the commercial real estate brokerage space, I've always trying to find ways to improve my business through different tools that I can leverage, or, just learning about what's out there as far as technological advancements. And I've been to a lot of different conferences. If you haven't been to CRE Tech, the CRE Tech conference, it's a phenomenal conference that's hosted every year. I actually had the chance to interview the CEO of the conference, great guy. But anyways, this is kind of an article that describes some of the new technologies that are coming to the market and the adoption of those technologies. So, one of the big things that, I remember even at the conference I went to in 2021, and obviously that's what's referenced here in the JLL article, is that, building emissions, finding technology that improve building emissions in order to reduce operating expenses are ones that are the most recently and most fervently adopted. So you can kind of see here, 45% of occupiers plan to adopt energy and emission management tech in the coming year. So it's definitely a hot topic in the technology space for commercial real estate. Along with that, they talked a little bit about various different other technological platforms, obviously shifting working tools to be able to facilitate in-office collaboration digitally and also on site are ones that are being adopted. Health and well-being tech, they want to make sure that they're providing their employee base with tools that they could potentially leverage to improve their health over time. And then also, a variety of different predictive analytic technology for employment, and then also whatever the vertical within their businesses as well. So, there's just a lot of new things coming to the market. Commercial real estate historically has been a type of business that has not been super active when it comes to adopting new technology, but it's changing, and it's changing really fast. So it's a really exciting time to be in the business. And I don't know if you've seen anything or done anything on your end regarding technology, Henry.
Yeah, I mean, I think about it like this, right? Even just for my own current standings, I live in Florida and I'm selling properties all over the country. Like you were just mentioning, you're selling a property in a neighboring state, and it's like, I'm selling properties in Jersey all the time, right? Like, it is virtual. I'm not even looking at the properties we're selling half the time. Like I'm not actually getting physical hands on any of the properties that we're trading. Right. So, it's very, very common for, again, the virtual broker is here, right? Like, living proof of it. You're living proof of it. You're about to sell property a state away, right? Like you're not going to see a property like that. So I think that, technology these days, this industry has been a dinosaur for so freaking long. And now it's like, listen, even with as much as, listen, like, do I think that we're going to, a completely virtual world? No. Do I think that there is ways that we could leverage technology like we haven't been able to in the last 20, 30, 40 years? 100%. Things like social media and being able to attract clients through digital platforms. Things like Zoom and being able to sell properties all over the country was not as easy as it is today. Technology, as much as Reonomy, CoStar, and the other softwares and platforms that we have that have gotten so technologically advanced, you can get just about every piece of information from one software about a property, where like, like half the time you could even find within a few website clicks, you might be, you're able to find sometimes the financials of a property. So it's like to have this type of ability at the tips of your fingers, it right now allows agents who are not 40-year, 20-year veterans to come into this space and come in and dominate in a few short years. So things like ChatGPT, even like, being able to use it for articles and other things. So definitely a huge leg up.
Absolutely. And, I mean, the way that I think technology is going to impact is like being able to almost clone yourself in a lot of different capacities. Like even now when we're broadcasting live, I mean, we're broadcasting all these different platforms, Facebook, YouTube, LinkedIn, you name it, we're broadcasting right now. This wasn't possible, just a few years ago, let alone a decade ago. And when you're talking about people who have been in the business for 20, 30 years, most people are not leveraging these types of technologies to better advance their career and better serve their clients. And so, if you're able to kind of get ahead of the curve when it comes to this sort of thing, I think it's only going to benefit. It's only going to benefit you and your business.
I think that even if you think about it as simple as cold calling, think about cold calling 30 years ago. The data that you can pull today, the dialers that we have today, right? The ability to be, the fact that I can pull a list and call a list of hundreds of people and get leads that way was not possible 10, 15, 20 years ago, nonetheless 40, right? So it's like the ease of lead generation today is one aspect of technology that I feel like people need to be paying attention to.
Absolutely. So next up is an article that Henry delivered. It's U.S. leasing falls 17% below pre-pandemic averages.
Yeah, so the reason I brought this up is that I think that this is another reason, we talk about this a lot, another reason to make sure you pick the right asset class to target. If you're stuck in the office world or office leasing as an example, right? Or if you're an investor looking at asset classes and you've done very well in the office category, right now might be a sign. This is the 50th freaking sign for me, but this might be the first sign for you to go, oh, wait a second. I don't just have to sell office buildings for the rest of my career, right? I don't just have to do office leasing for the rest of my career, even though maybe I've done it for the last 5, 10, 20 years. I can change, right? So it's finding out, like, look, this is, I just posted a video about choosing the right asset class, and a huge part of it is following market trends, right? Office leasing is decimated. The office market has been decimated in a vast amount of the U.S. markets. And I think that it's like, if you think that you can do business the way that business has always been done year after year after year without changing, I think you're wrong.
Yeah, no, 100%. And you testament to you is you really put an emphasis on, especially if you're newer to the business, in analyzing the different market that you're in or whatever you're trying to focus on, and determining if there's enough transaction volume to support whatever, income you're trying to achieve. And so, obviously this is indicative of what's going on across the country. So, one of the things you probably should consider is, if there's another property type that's transacting at a higher level, maybe you focus on that. And it's really interesting to see,
Absolutely.
Obviously there's a delta between, the pre-pandemic level averages as far as office leasing is concerned. But, obviously the footprint that you can see, the footprint that they're taking as well has dropped off sizably. As I think they were at 42, just over 4,200. The average lease was roughly 4,200 square feet. Now it's down to 3,200 square feet. So you're talking a 33% drop off, and I'm sure that trend is only going to continue. So
absolutely, this is, and that's even a perfect example of saying, like, in the investment world, right? Like, if you have any portion of a building, like if you're looking at a building that's mixed use, right? And it's like, how on planet Earth can I be better suited for the future with this mixed use property? Maybe it's retail down below and you have office space above. It's like, okay, maybe I chop up the office space above and I make it a co-working type of space, or I chop it up into several different smaller offices instead of one big office. And it's like, I know this sounds rudimentary, but when you're looking at thousands of deals on an annual basis and you're like, how do I squeeze the juice, the value juice out of a property, and say, like, how do I increase the value here? Like, well, if you rented it at a smaller price, smaller office spaces, you could rent at a higher per square foot basis, right? Like, again, the Regis or WeWork model actually is lucrative if you do it the right way.
Absolutely. So, all right.
Which, again, guys, just to recap, again, we come to you live each and every single Wednesday, 2 p.m. Eastern Standard Time. We run for about 30 minutes to an hour every single week, so make sure you tune in weekly. We appreciate that very much. Raphael, what's the next?
We're pulling it up right now. So, all right. So the next article is a deep dive. Who's afraid of commercial real estate? With negative headlines stoking widespread concern, managers are looking to contain the damage while investors strive to get clarity. And so the reason I wanted to kind of share this is because, I think there's often a misconstrual from the media standpoint in particular. I can't tell you how many times I've heard conversations with people that said, oh, commercial real estate's in trouble. And it's like, yes. I mean, if you look at it from the perspective of what you see in the news, it looks like it's a cataclysmic event. But in reality, what's mainly struggling is central business district office. And it's something that had been trending downwards even prior to COVID, but just was accelerated as far as a timeline, post-COVID. And so, this article kind of highlights some of the experts within the commercial real estate space, clarifying that says, yes, we have to rebrand the way that office is perceived, but that doesn't mean that other property types are not, functioning at a high level as well. So it's one of those things where, it's important to, get clarity on what exactly is happening in the market and not just listen to the media that says that commercial real estate, it's essentially going the way of the dinosaur, when in reality, there's multiple different property types. And even on the office landscape, there's different ways to be able to rebrand the office market to be able to potentially attract a newer clientele as well. So
Yeah, I think that like what happens is that the news is there, the news was created specifically to create fear, right? Like
mhm,
because fear drives attention, right? They want attention from people. So if you're actually looking at specifics in regards to the market data, yes, is there less transactions going on? Yes, is there less transactional volume overall occurring? Yes, that does not mean that there isn't opportunity. And it's actually, where in today's economy, the better the deals you find, the more money you'll make, right? Like it actually doesn't equate to it anymore, where regardless of what happens to the economy, up, downs, all these different issues that can happen, right? Is if you're finding great opportunities where people can make great money, you will always be making money in this industry. So this is actually an economic time where, like, look, is it more difficult to find those interesting opportunities that can make great money for investors right now? Of course. But it's just like in the stock market when all of a sudden, at the beginning of this year or since the beginning, there's like, I think it was like by March or something like that, we had like a 10% drop, 15% drop in the stock market. It doesn't mean that finding good stock opportunities is absolutely not happening, right? There's still good deals to be bought. So, this is just another reminder, finding the right asset classes to target, finding the right markets to target, finding the right opportunities right now is where the money is.
absolutely. No, I can agree more. And again, I think, taking things with a grain of salt and really getting an understanding from yourself. Like, and this applies not just to commercial real estate, it applies to everything. Don't just read the headlines. Understand the articles, get in there, get a clear understanding of what's actually going on so you can better serve your clients in the marketplace. And so
Yeah,
uh
and again, shift, adapt.
shift.
You
Yeah,
might have to change, right? Like doing things the way that things have always been done, um, is just it's not a recipe for success, right? If you're seeing that right now, hey, just like we talked about the office side, targeting office might be a really difficult runway, right? Like you're running to you're on a sinking ship, as
mhm,
right per se. You might as well get off the sinking ship, get into a ship that's moving at a great pace and that is strong. Like the retail world is coming back hard in a really heavy way, right? The industrial world is still moving in a great way. So just paying attention to that.
absolutely. All right. So next up is Henry's article: Echoes of 2008 price shifts resound in today's market. Investors' unease and rate fluctuations stir memories.
Yeah, so I think that this is yet again, I think this is pointing out that we are in for a few years, right? And we're tailing end, we're coming to the tail end of the first year of a recession. Okay. And I think that we are in for a couple years of down years, right? Quote, negative GDP, right? But also a little bit of a tougher time in the commercial real estate world or the investment world in general. I think that if you're not structuring creative ways of making deals happen, which either means you're negotiating a very good price or some seller financing or JV opportunities and being creative in one way or another, you're going to find it to be much more difficult in this economic time. You're not going to be able to just list a property for sale like it's been for so many years the way to do it. You're not going to be able to do that anymore and sell a lot of property. Now you have to be creative.
Absolutely. And yeah, I mean, I think there was a lot of people, especially during 20 and 2021, that got really comfortable and everything was super easy. I mean, if you listed investment property in 2020 and 2021, and it was in multifamily, industrial, office still struggle. But again, if it was multifamily or industrial property that you listed in 2020 and 2021, that thing flew off the shelf. You essentially didn't have to do anything. You would get multiple different offers. You were essentially in a bidding war. And so you kind of named your prices when it came to the seller standpoint. That's obviously shifted. And obviously, because this is such a debt-driven industry, and because the debt markets are starting to constrain, and the fact that we're dealing with a high interest rate environment, we're going to be in this environment for a while. You hear a lot of people trying to say, "Oh yeah, interest rates are going to go down next year." I don't think so. I think we're going to stay in this same kind of steady higher interest rate environment into 25. But again, that's all speculation at this point. We can't read the future, but that's to my knowledge. And when you look at history, you look at how interest rates have shifted over time, and during these periods, they stay steady for years. In the 80s, it stayed steady for almost like 5 years. So, it may not be that long, but, it may be. So you got to be ready and be prepared.
And I think that we take the long-term mindset on this. I think that the people who are going to come out on top and goes, if nothing changes other than it getting more difficult than it is today, other than interest rates going higher, other than, it becoming a more complex world, okay, where it's only going to get harder, not easier for the next year, 2 or 3. If that was the case, how would I approach business?
Absolutely.
And the people who think like that are going to find a way to thrive, not just survive or barely survive, if not fall out of this industry. Right. So by the way, if you guys are watching live, we appreciate it very much. You guys can put any questions you'd like in the chat down below. We're actually going to be opening it up for Q&A shortly. So if you have any questions or anything like that, if you're watching live on any platform, you guys can put any comments, questions down below. We'd love to, be able to shout you guys out.
Absolutely. And we'll be going through a few more articles. So if you guys go ahead and drop the questions in the chat box, we're going to go ahead and have a Q&A section here shortly. So feel free to do that as we get through the rest of these articles. So, all right. So next up is September 2023 commercial real estate market insights. So NAR actually does a pretty good job of creating these overviews of how the real estate landscape is performing. They have their head of, I believe it's the chief economist for NAR who helps with this type of reporting. But I always check the commercial real estate market insights because it does really do a great job of kind of summarizing the landscape, and it does provide some useful data points. And especially if you're trying to educate people about the market, maybe you're trying to create content regarding how different property types are performing. This report is usually pretty good. And so as you can see here, they talk about the different property types. So you'll talk a little bit about multifamily. You start getting into, it looks like here there's the industrial side of things, or office, I'm sorry. And then they talk a little bit about industrial here. And then with the rise of e-commerce, then they talk a little bit about retail and how it's been shifting. And then finally over here, I think they kind of talk a little bit about hotel demand as well. So they try to cover all the property types and share additional insights. So I thought I'd just kind of share this with you. And as you can imagine, obviously, multifamily, industrial have been performing pretty well. Retail has been very surprising since COVID has transpired. And then even hotel demand has definitely boosted. And with all the different, with Airbnb judgments coming down in New York City and some of these other markets, which I think is going to probably be a trend in some larger markets, I'm sure hotels are going to be the beneficiaries of those trends. So.
Yeah, I mean, listen, guys, this is a reminder to check your local market statistics. But, this is a lot of national stuff, right? That's kind of what we're talking about right now. Not your hyper local, right? So if you're checking your hyper local markets, you need to be checking what properties are trading at a high level. Where is the transactional volume headed, right? Like if you can look at the last 12 months versus the last 90 days, what's changed? What asset classes are moving at a much faster pace versus what's are slowing down, right? Your local market might be crushing it with retail, and your 3 counties over, 4 counties over might be struggling to sell retail. So it's paying attention to these types of points so that you guys can make adjustments in your own personal business. And not only look, I sell properties nationally, not because I anything else other than I know that there are some markets that are really doing very, very well in this economic time. And then there's a lot of hyper local markets to where I even grew up in New Jersey that are struggling right now. And if I was only selling properties in that tiny town, I'd have a problem. Right. So take some time to do your analytics, go through Reonomy. I think I actually posted a recent video about that specific analytics. So I would take a look at that and just do the same research for yourself.
Yeah, most certainly. Yeah, I couldn't agree more. And obviously it's good to have an idea of the national trends, more so for just conversations and being well versed in what's going on from a national level. In particular, if you are transacting across state borders, getting an understanding of trends like that is beneficial. But you're right, Henry. I mean, I think it's much more important to really be hyper specific, because real estate is hyper specific. Just because something's working in one market does not mean it's actually going to be working in another market, the same way. So it's always important to really get familiar with your local market and make sure that you're able to eloquently speak on it. So
Yeah, and listen, like, there's been numerous occasions where I've had to make adjustments in our prospecting. Numerous occasions where I've had to make adjustments in my local the targeting of where those leads are. Right, like, I have to be making adjustments all the time in order to stay ahead of it. Right, but again, if you're not doing the research, which I would be doing on a probably a weekly, if not monthly basis, see the properties that are trading. Pay attention to those monthly sales and those quarterly sales, so that you can be adjusting and riding the wave in real time.
Absolutely. Couldn't agree more. All right. So next up is one of Henry's article. It says travel recovery picks up speed. Consumer spending outpaces income growth. Mortgage rates spur jump in all cash sales.
Yeah, so I wanted to talk about this specifically because I think it influences a lot of different things, right? Like, so if you look at this one right here, um, this is a really interesting paying, like, for global market purposes. If you look at this, this is just showing for global market purposes of, like, because a lot of global markets are based off of tourism, right?
Mm-hmm.
Like,
Yeah.
massive amount, like, America is not based off, like, a large portion of America is not based off of tourism, right? It's based off of the hyper local markets, right?
Mm-hmm.
However, like, places like, even nationally, this is just a thing to pay attention to, which is interesting, is like looking at this on a national level, which is saying like, oh, places like New York, San Francisco, Miami, LA, right? These places that have a lot of tourism, right? Normally, checking about the tourism levels and seeing like where the people are moving or coming to or coming out of, like, and seeing what those trends are. Because if you're in a global market right now and you can see that, like, hey, there's actually been less and less people traveling to these global markets than there has been in the past, which is a very interesting note in regards to the hotel space,
Mm-hmm.
right? It's like in Asia, you can see that, like, okay, well, they're dropping off. What is that, 25%?
40, 43, it looks like. Yeah. All right.
Yeah.
Is that, yeah,
No, I'm
43
saying
for Asia?
yeah, I'm saying, well, year over year. So I'm saying, like,
Oh, okay. Yeah.
yeah, right. So or that's it's month, sorry, month or quarter over quarter. I apologize.
Mm-hmm.
Quarter, it's June to October. So quarter over quarter, they're down, 25%, levels wise, right? The delta between those two, right? And
Mm-hmm.
it's like that's scary. Right? That's scary if you're in the hotel business in Asia, right? And it's like, oh, hey, if you're thinking about getting into the hotel business right down the block, I'm in South Beach, Miami right now. It's like, if you wanted to get into hotel space, you better know the tourism levels, right? So that's one of them. If you scroll down a little bit in the rest of the article, you'll
Sure.
see, like,
Yeah.
consumer spending is actually at there's a little bit of there's a graph right there. Consumer
Mm-hmm.
spending increases. Isn't it freaking nuts how, like, the like personal income to consumer spending, how, like, this has happened forever?
Yeah.
If you want to succeed in this type of market, is making some slight adjustments financially. It's making adjustments for, like, hey, if you were making $20,000 a month as an example previously, like, hey, you might not be making that in the next 90, especially if you're in the real estate world. You might have down months, and being very smart and fiscally responsible, where instead of, balling out of control because you're making a few dollars during a 2020-2021 market, we're heading toward a part in the economic times right now in the commercial world where that might not be the case, you know.
Yeah,
So
100%. And what's crazy too is, I think I read a statistic that was crazy. During COVID, I think it was the first time in I don't know how many years that the savings rate for the average consumer was like 10%. So think about that. 10% like was the average, which before it was even less. Like historically it's been a lot less. I think back in the 30s and 40s and 50s that obviously was different, but really we're a consumer driven society and many people are on the paycheck to paycheck windmill, and the credit card debt has continued to increase. So, that's one of the reasons, like when you had mentioned that we are, currently in a recession. I think we are. I think right now we're in a period of time where people are using credit to finance their lifestyle or continue to finance their lifestyle, but that's not going to be something that can continue on over the next few years. So, I agree with you in particular when you're talking about the impact that this particular rule is going to have and everything else. You've just got to be, wiser about how you're using your money, and don't fuel growth through debt. As if you can, try to really be smart about how you're using your money to be able to grow your business. So
absolutely. And then, last piece of this is, Mortgage rates, which again, we've talked about a couple of times. I think this is important to pay attention to. You as a broker should be knowing, you should know where the rates are. You should know where pricing is more so than the individual, right? The clientele,
Mhm.
right? More, you need to be on point. Like, I want to know more than my lenders. I want to know more about my market than my sellers, right? Where you actually then have the control in the conversations about how to educate people in this place. So like, this is interesting. Where interest rates here, I mean, we're touching 8 points, 8% rates, which is making things like, remember back in the day, like you could sell a building at a 6 cap, 7 cap. You can't do that today when interest rates are 7.5, 8%. You can't do that. No one's buying it.
100%. Yeah, and I'll point your guys' attention to the first line in this actual, below the graphic. The National Association of Realtors reported 29% of existing home sales were all cash transactions in September, up from 27% in August and 22% in September of 2022. So, obviously people are seeing that instead of me going out and buying a property and, putting down 40, 50%, might as well just buy it cash. So, there is still money out there. I think that we've talked about it on multiple different occasions. There is money out there now. The debt-driven deals that we've been used to over the last several years, they're just becoming harder to come by. But if you can build relationships with the right people that have the economic resources to be able to pull off some of these transactions, it could be pretty lucrative for you.
Yeah, this is a reminder to know, like, there is so much cash out there. There's still a lot of cash out there. People are liquid. Like, there are a lot of investors who want to spend money. How many people I have knocking down my door like, Henry, I got money ready to go. I need deals. Send me
Mhm.
deals. I need to spend money. And finding those lucrative opportunities now more than ever is going to allow you to see a financial gain in 2023 and 2024, while most other agents are struggling to sell properties.
Absolutely. Couldn't agree more. All right. So, lastly, this is one of Henry's articles. It is 3 key office trends of 2023. These patterns can shape office occupancy market next year and beyond.
Yeah. So again, another point. Like, this is just really to educate more than anything, which is talking about how, like, the landscape of work life has changed, right, massively. And this is talking about, like, hey, this is the amount of people who attend offices, right? The amount of employees that attend offices, which means that offices are running at a 50% occupancy rate. Right, 50% of employees are really have returned to work, and this is starting to level off. I think that this is exactly right, where majority of the time, like half of the staff is working remotely. My entire team works remotely, right? Like, everyone works remotely. We have offices, but nobody. I have offices, and nobody goes to them, right? Like, it's just, at this point, it's almost like, why even have the office space? And think, like, if you're building a business, you need to be thinking with the remote work life balance mindset. I'm saying your employees that you're going to hire are going to want the same thing, right? You, like, listen, I make half my work week I do from home, right? A lot of my properties I sell, I'm selling from my condo here in South Beach, rather than being hands on the properties. Like, this is changing, and it's important to be paying attention to it.
Yeah, I mean, we're both at our home office right now doing this thing, right? So it is a reality of the landscape. So yeah, I mean, I couldn't agree more. And it looks like here too, you had another reference to employment growth slows to its half long term average.
Yeah, like, this is exactly like you're
Yeah,
actually
lease
mentioning. This
sizes. Yeah.
this is exactly what you were mentioning beforehand, where the size of the leases that these people are taking has dropped off drastically.
Mm-hmm.
The size of the spaces that they're taking are not what they used to be. Like, the buying office buildings was very lucrative for people who are or for companies that had 100,000 square feet of required space, because they had hundreds of employees to house. When they don't have that anymore, and half that staff is not working, from the office anymore regularly, why on planet Earth would they buy the building anymore? Right? Where I even see, like, I probably think it's probably higher than 50% of the staff these days is working remotely. I think it's a very high percentage of staff is working remotely. And it's important to be paying attention to these types of trends, to seeing it and going, hey, maybe I shouldn't be prospecting for office deals anymore. Or even better, you could be prospecting for office deals where you could do conversions into self-storage facilities, into warehouse space, into retail, where you can find a better return.
Absolutely. Couldn't agree more. All right. So That's all we have as far as the actual articles are concerned. We want to make sure that we answer all you guys' questions. So if you guys don't mind, go ahead and type one in the chat box. We are streamed live on Facebook, LinkedIn, YouTube, even Twitter, which is a cool addition as well. So feel free to type away. In the meantime, Henry, while we're waiting for some of the questions to come online, do you have any other trends or anything you're following that you want to talk about that could be a benefit to the audience?
Yeah, I'll mention a few things, and I know you also had something that you wanted to mention that's coming up soon so that people can take advantage of. So I think that right now in this economic landscape, I think it's important to also be paying attention, because I know you mentioned the tech world. It's like if you're not on social media trying to attract the right individuals, right, trying to attract clients, like social media today, I think is one of the highest or most underutilized opportunities for people in the commercial real estate world to take advantage of. And now this is not just posting a picture about a property you sold, right? You see all those residential agents like, oh, new listing, new under contract, new closing. That's not what your clientele wants to look at, right? It's putting out content that's targeting the clientele. It's like, hey, how do I make more money on my property? How these are, top tips to increase the value of your property, top tips to, and by the way, I think you have something that could be lucrative for people in that boat to give them some ideas. What do you have coming out soon?
Oh, sure. Yeah. So, Henry and I was talking offline. I've written a couple books on commercial real estate, one being Before You Sign That Lease, Before You Buy That Building. And now my latest book's coming out on Thursday. It's called Before You Sell That Building, which is the small business owner's guide to selling commercial property. And the reason I was first off started to write the commercial real estate series was because it was just a lot. I was getting the same questions over and over and over again from people. And so I figured what better way to be able to provide some value, even without me physically being there. Kind of leveraging technology. You create audible books and people can listen to your, insights. And so that's what I decided to do. And obviously the Before You Sell That Building is more of a insight for sellers who are people who are owning commercial property. They're business owners. They've owned the building for many years, and now they want to they've sold their business and they want to now go ahead and sell the property. So we kind of talk about the different strategies they can employ to be able to do that. So
yeah, and which they could be posting on social media to educate those types of clientele, right? You buy Raphael's book, you take that content that he has in the book, and you create social media posts to educate that individual. They're going to call you.
Absolutely, yeah, and then we'll be streaming that live too, so you guys will have a chance to tune in. It'll be tomorrow from 6 to 8 p.m. We'll go live around 7 p.m. and obviously I'll have my little spiel about who I am and what I do, and then dive into the book a little bit. We'll have some Q&A, so we'll be checking online as well. So if you guys want to tune in, feel free to. And that's Eastern time. So Jonathan, we'll go ahead and dive into the questions. So Jonathan asks, considering the recent rise in treasury yields, what are your thoughts on the potential scenarios for commercial real estate prices in 2024? How do they compare to previous cycles?
Yeah, I mean, listen, we're in for it, right? But also know that like there's two sides of this. There's the side of the individuals who need to sell, and there's the side of the individuals who have absolutely no required to sell, no need to sell, right? So, like, listen, do I believe that values are going to be coming down because interest rates are higher? Of course, right? Like, but for those people who need to sell, they will feel the effect of it. The people who don't need to sell, I have several commercial properties where like, I hope the prices go down. I'm not selling it, so I have no care in the world. They could be worth millions of dollars less than I bought them for to someone else, but they're still cash flowing like crazy, right? So the properties of people are the instances in which people need to sell, they're going to feel some pain. So in that regard, yes, I do believe they're going to be the prices will tail off for a little bit, or at least over the next 12 to 24 months while interest rates are still high.
Yeah, absolutely. I mean, again, this is a debt-driven market. So that's why you're seeing transaction volume drop off, is because we use debt to be able to acquire a lot of these properties. And so for those individuals who have to refinance, and a lot of these will be forced refinances, they're going to have banks that come in and say, hey, your debt service coverage ratio or whatever metrics they're looking at is not penciling out. So we need you to have a cash infusion. We need you to put in another 10% of whatever the asset value is, because now we have to cover the delta. So in those situations, if you don't have the money to cover it, then you're going to be forced to sell. And in those situations, you're going to have to take a loss. You're going to have to take a haircut. So, again, anytime you put yourself in a position where you're heavy on debt, and a lot of these owners too, it's not their fault. I mean, obviously no one could have predicted the pandemic, but again, you're just going to have to contend with the fact that this is something that could happen. So
Yeah. And listen, I think there's always been choices in life. There's always been choices of where to place cash, right? Like that's what we're always questioning as investors. We're like, oh, I got money. Where do I move it? Right. And commercial real estate has been a very lucrative option for numerous occasions. What I think that also is interesting to pay attention to is like, this is why I talk so heavily about great investment deals, right? The better the deal is, the more money you will make. Right. So it will continuously be, even if interest rates are higher, which treasury yields have always been something where a very successful, very abundant investor goes, I can invest in treasury yields and make 6 or 7% interest over the next X amount of years, X amount of months, or I could put it somewhere else, stocks, crypto, commercial real estate, right? Where do I want to place my money? And obviously it's very hard to go, hey, if I can make 6 or 7% here, that's almost guaranteed money with no work involved. Why on planet Earth would I invest in something that's a 7 or 8 or an 8%, 9% rate of return with a lot of work involved? Right. So where you can find deals, like, listen, where the value is finding those deals where your IRR is 15, not 8, right? Or 25 and not 7, right? Which I believe they're still out there.
Yeah. And even like, on the investment side, obviously that's extremely important, but even on the listing side, if you're listing properties for sellers, there's still a lot of people out there that have unrealistic expectations of where we're at in the market today. And so being able to kind of frame that and say, look, like the treasury yields are 5.5%, 6%, whatever they're at right now. I don't know as of today what they're at, but you kind of put the perspective on their shoulders and say, hey, if I were an investor and I could literally get a risk-free return or safe return at 5 or 6%, why in the world would I be marketing this property at five cap or 6 cap or whatever you're marketing it at if it in fact is not something that, if it's going to take more work and more management, whatever else. And so kind of creating that framework for sellers to understand that could also be of value to you as you're looking to represent them and try to deliver the best you can to the marketplace. So
the 10-year right now is trading at 4.8.
4.8. Okay. Right. Yeah.
So
I was hovering around 5, so I figured that was the case.
Yeah. So it's just like, nowadays I still think that, what people are not paying attention to is like, listen, the people who are investing in treasury yields are 9 times out of 10 not commercial investors. Right. They're just not commercial real estate investors, because like looking for a 4.8%, like this is a perfect opportunity for you to find mom and pop owners who own a property, one of their own private properties, and they're looking for a 1031 option where you can throw it into a DST, which is about as close as possible as you can get for a 1031 option. That's that applies to the same tax code, where they're going to get a very modest rate of return, 4.8555, maybe 6 if you're lucky, rate of return. But it's a very modest rate of return. I think in commercial real estate, you can get infinitely higher returns, but it's safe, right? And using that as a objection handler to those who are looking to do 1031s and don't know where to place money right now.
Yeah. And I mentioned that in the book as well, because, that's one of the hardest parts sometimes when you're talking to sellers is like, I don't have anything to put the money in. Why would I take the money and then have to pay the fee? And then you mentioned the 1031 exchange and they say, oh, well, that means I have to identify a property in 45 days and nothing's available. Well, now there's alternative options you can take as well. They got the 721, the UPREIT, you got the DST that you can explore as well. So there's a lot of different avenues you can explore as a seller to place your capital in a tax deferred vehicle. So, again, it's educating yourself about those types of programs and then being able to eloquently explain them to a seller so that they're able to, determine if selling the property is right for them. So just a tidbit.
Yeah, absolutely. And again, just to remind everyone, again, we come to you live each and every single Wednesday, 2 p.m. Eastern Standard Time. We come to you live, talk about what's going on in today's market, the good, the bad, the ugly, and how you can adjust and succeed in today's commercial real estate world. If you guys, again, just a reminder, if you're live, make sure you can put a comment down below. We will answer and respond in real time. We'd love to be able to support you, give you some free insight, or at least our 2 cents about how we would handle the topic. So again, if you have any questions or comments to make sure you put in the comment section down below.
Absolutely. And we'd love to hear about some of the deals you guys are actively working on, maybe some of the challenges you guys are facing in the marketplace. We've had on the previous call, we had different agents and different investors share some of those scenarios in the comments as well. Obviously, be happy to share whatever insights we can on the call as well.
Yeah. And listen, if you guys have great deals that you have all over the country, you can email us at info@henryeisenstein.com. We'll review the deals with you. and we can try to see if there's any opportunity where either Raphael or myself can bring our investors to the table to help you close more deals, right? So if you have any great deals right now that you're working on anywhere in the country, if you're global, I'm sorry, we can't help you right now.
One day,
But
one day,
one day we'll be able to get there. But right now, if you're anywhere in the country and you have some interesting off-market direct-to-seller opportunities, info@henryeisenstein.com. We'd love to check them out and support you where we can. Listen, so in the meantime, again, if you guys are live, if you have any questions, make sure you put it down in the comment section down below. Also, I think that one thing that we can also mention, if you have not checked out Raphael's YouTube channel, make sure you check him out. He's doing an unbelievable job. You can also check me out on YouTube. You can Google either one of us. Make sure you're following the journeys. Lots of amazing insight, great content all around. So make sure you check that out. We basically, why do we do this? Why don't we answer that question? Why do we come to you live each and every single Wednesday? What's your 2 cents on that, Raphael?
Yeah, I mean, obviously it all stemmed from, you coming on my podcast, and then, I came on your podcast. We have a lot of very similar ways of approaching the business. And so we figured what better way to kind of help the broader landscape than to come on a weekly basis and kind of share our perspectives. And obviously, just so you guys know, I mean, we're still learning in the business. I mean, we're continually learning, and we don't claim to be an expert on everything, but I think there needs to be some form of forum that people can come to learn a little bit about what's going on in the marketplace, have a forum for discussion. And then obviously, we learn from each other. So we create a very unique value proposition that way. So that's 100%. What I thought. I mean, obviously, if you have anything to add to that, I'd be happy to.
Yeah, I just feel like, the commercial world is very uneducated in the sense of a lot of, there's a lot of information, but I feel like there's not a lot of guidance as to what information is okay, what do I do with this? Okay, office is down. What does that mean? Right. And it's really doing a deep dive, giving a lot of education and clarity to the commercial real estate landscape so that more people can see massive success in this industry, like it has changed your life and my life.
Mm-hmm.
This industry can change yours as well. So for that, any one of those individuals out there who feels like, this industry is tougher than it probably should be, this is for you. Right.
Yeah. Yeah. Help bridge the gap because, I'm sure when you started, it was probably even less so, but there's really not a whole lot of content out there that really focuses on the commercial real estate business. And so that's obviously something that, was one of the impetus for us starting, I'm sure, our channels. And so, hopefully we can continue to contribute to that endeavor.
Absolutely. And again, guys, if you have any comments or questions, make sure you put in the chat box. We're probably going to be wrapping this up in the next coming minutes, and we want to make sure we give you all the support possible. If you have any interesting articles that you'd like for us to talk about, again, you can email that to info@henryeisenstein.com. We will have those added to the next week's session. So again, you can put those either down in the comment section down below and any type of article, or email it again to info@henryeisenstein.com. And we'll make sure that we check that out and have it added to next week's session.
Absolutely. Yeah. And obviously, again, if you guys have any other questions, pertaining to, the things you guys are doing on a day-to-day, feel free to email those as well, because again, during the Q&A session, we want to dedicate some time to really addressing the burning questions you all have, whether that's deals you guys are actively working on or, challenges you guys are facing. It's really important for us to be able to help you guys achieve your goals. All right. So Jonathan had a quick question. So with the current market conditions, what due diligence measures should potential buyers/investors take when considering distressed properties to ensure they're making sound investment decisions?
I'm loving your questions, Jonathan. Very astute. Very astute. I love it. So just in my 2 cents, I think that it's important to pay attention to things like we are buying with cash flow day one, right? Ideally, I like to be buying with cash flow day one. So there's a lot of interesting things that are going on in the landscape where people may have a 60% vacancy as an example on a property, and that's why they're selling. And what we try to do is we try to lock it up at a fantastic price, and a contingency in the contract is that I have to lease it out to 100% or 95+% occupancy prior to closing. Okay. I'm willing to put down a heavy deposit. I'm willing to do the whole 9, but I want to buy it with cash flow day one. Okay. Having a mental, having the specifics written out in an LOI that gives you contingencies and ways to back out, more so in this economic time than most other times. Having, for underwriting purposes, bringing a deal to several different real estate lenders and saying, how much would you lend on this property? And then attaching that quote, that term sheet to the offers that you're submitting and saying, hey, here's exactly the loan I'm going to get. I am approved for it, right? And I have they're requesting a DSCR of 1.4%, right? Like I'm not requesting that, they are, and no one can get a loan unless they do this, right? Like that, hence the price point, right? So I think it's really doubling down on things like making sure you're cash flowing day one. Number two is that it's not a cap rate business right now; it's an IRR basis, right? It's like, okay, if my IRR, if I have the massive amount of upside, I can pay a lower cap. That's okay. I can buy a 7 cap and break even day one, right? Or smidge of cash flow. However, it needs to have enough of an upside value add option on the back end where my IRR is still in the in the 20 range plus, right? That's at least my 2 cents.
Yeah, no, I couldn't agree more. And again, you have to start becoming a lot more creative in these times, right? Structuring deals is going to be much more of a premium nowadays than it was maybe a couple of years ago. And not to say it wasn't important in 2020 and 2021 or even before then, but we were in a massive bull market over the last decade. So really, if you bought a piece of property and sat on it, you were going to do pretty well. Obviously there's situations where there may have been, whatever other contention, but on average, you're really talking about buying something and holding it for a longer period of time. You're usually would do pretty well over the last decade, but over the course of the next few years, I really do think, similar to what Henry said, is it's going to be important to really structure deals that make sense in the immediate term, and then ultimately it's going to make sense more so in the long term as well. And as far as other due diligence measures, I mean, just do the standard stuff. Make sure you inspect the building. Make sure you have financing contingencies in place so that you can back out if for some reason you're not able to get the proper financing. I've done several deals on the development side, so we have zoning contingencies. If we're going to buy a property and we want to make sure it actually is going to fit what our developer's looking to do, then we're going to have a contingency in there to make sure that we're able to, back out if for whatever reason we can't get the zoning that we require. And usually a lot of times with the zoning regulations, they usually take a lot longer than, at least in my market. I'm sure internationally or around the country, it's probably very similar. It's going to take you a long time to get that zoning. So making sure you have enough timeline on the contract to be able to achieve that objective is also important. So, I mean, we could talk probably for hours about due diligence, but again, structuring deals well, and then really doing the standard due diligence items like making sure that you're able to get out if for whatever reason that the deal doesn't work out. So
yeah, and I think with economic landscapes becoming more complicated, this is a perfect example as to like these are the swings, right? Like in 2020, 2021, people were waiving everything, right? They didn't care. They were just buying deals as is, where is, the whole nine. Right now, it's the opposite. Now we're layering contingencies left and right. Adding a novel's worth of contingencies so that we are protected.
Yeah. No, 100% couldn't agree more. So hopefully that answers your question, Jonathan. Obviously, we do greatly appreciate all the questions. I think they were very, informative, and hopefully we were able to answer them to the best of our ability. So
likewise.
All right. Well, we're coming up close on the hour, so we'll give you guys another maybe 30 seconds. And if not, then we'll go ahead and work on wrapping up this edition. I think it was great. I really enjoyed the discussion today. I mean, I think, obviously there's a lot to chew on, and I'm looking forward to seeing what we come up with next week as well.
Yeah, again, if you guys are tuning in, we come to you live each and every single Wednesday, 2 p.m. Eastern Standard Time. We go for just about an hour each and every single week. If you have any deals, if you have any articles you want us to check out, make sure you're sending that currently to info@henryeisenstein.com, and we'll make sure we review and get back to you, if not have it in the next session. Again, if you have any questions, you can always break them down into the comment section down below. We are always here to give our 2 cents. And other than that, Raphael, any closing statements for us?
No. We do greatly appreciate you guys tuning in every week. Your guys are the reason why we do this. We really do feel very passionate about making sure we serve the commercial real estate community as best as we can. So again, thank you again so much for tuning in, and we will see you all next week.
Take care.
See ya.